is Tuesday, October 28th. I hope people had a good day yesterday because there is one stock that everybody who listens to me should own. And AlphaPix has owned it since 2023. It's over 1,000% gainer. We will go over it because it just reported earnings yesterday and it's popping. In the post market yesterday, in the pre-market, we will go over it. We will go over why we're in a rally, why Q4 might be a good thing, because UPS just reported earnings. And they kind of hid the story. We'll go over earnings because earnings are turning out to be great. We talked about the economy, earnings, and the Fed. I bought a couple of stocks yesterday and AlphaPix sold a stock. I will tell you exactly what stock they sold and why, because it's a rules-based portfolio. Jobs. It's about jobs. PayPal, another OpenAI partnership. That one is popping. And if you own AlphaPix or the top 2025 stocks, you own PayPal. So you're doing well. All the earnings that we're going to go over, Apple and Microsoft, who's going to reach $4 trillion first. We will go over in education, why volume is so important, and then tonight's earnings. So that's the show. But let me start this out with just a little kind of tidbit, because TrendSpider is on sale. Okay, and I do point people, the few people that bought yesterday, they didn't buy this top portion. It wasn't in their budget. They think that they can use AI. Let me just give you an idea. There's 52 trainings per year over here on the advanced platform. It costs $50 to get a one-on-one training from TrendSpider, from a product expert. So it matters. Again, at $96 a month and you're getting 52 per year, if you just assume you're paying less than $25 for actually each training, and then you're getting the tool for free. So that's a significantly better value than even the premium enhanced standard. But I would urge you, the premium is the minimum that I would get, because for $1 more per month, just upgrade to that one, because you get so many more. You get 10 trading bots, you get 50 alerts instead of 10 alerts, you get 90 days instead of 30 days. You get 5-minute back test versus 2-hour back test. You got 5-minute scanning versus, there's a lot in here. And one of the things that you're getting as a bonus, you see a bonus offer. You're getting access to their basic plan on Sidekick, okay? This is normally $50 a month. Again, the savings is tremendous with the offer. Every plan comes with 25. You're getting bumped up for the first month up to 100. So you can learn how to use Sidekick, which is in the upper right-hand portion right here. It is their proprietary AI. It has far fewer hallucinations. It is a far better AI than going to Perplexity because it's trained only on TrendSpider data. They don't let it go out to the internet to look at things. So you want to know what companies reported in the last earnings? You can go onto Sidekick and ask. You want to know, hey, how did this stock perform when they beat versus when they didn't beat? You can go and ask Sidekick. Again, it's an open platform. So it's fantastic. And you don't need to sign up for these annual plans. Go and try it out for $5 freaking. Again, go to Linktree, linktr.ee. But I want to bring something up because fundamentals matter. And stock charts do as well. Charts aren't guessing, but they aren't facts. Okay? The past is the fact. The future is opinion. You can do the best technical analysis, and then all of a sudden a tweet comes out or a catalyst of some kind happen, which blows up all of your technical thesis. Okay? But if your thesis includes a mix of fundamentals and technicals, I have over 40 years of trading and investing experience. I've seen far more wins with that mixture than I've seen losses. So you need to understand what you're investing in. And that's why I suggest both this, which is premium and AlphaPix, and TrendSpider. And again, this is the end of the ad. You've gotten it out of the way. Let's look at the markets because we're in a bull market. In pre-market, QQQ is up. Today will likely be a very good day, because it's almost time for your favorite stat of the year, October 28th. It's Ryan's birthday, but it's also the best day of the year for the S&P on average, okay? Since 1950. Today we're starting out good. And the data suggests stocks historically bottom on October 27th and rally into the end of the year. That's from 1950. You can sign up for the newsletter and see all of these charts. Okay, all of these charts are in the newsletter. Where is my newsletter? Let's just pull it up here. dailystockpick.substack.com. You can go to Linktree and do it. But you see yesterday's thumbnail? Yesterday's thumbnail was awesome. Let me just show you today's thumbnail. Class is in session. But again, the newsletter is free. So any of these charts that you want to see in detail, go to the newsletter. You'll get it in your inbox every day. It's free. Okay? And the Carson research team added some equity exposure last week. Why? One reason, a good first 10 months out of the year equals a better final 2 months. The S&P is up 15% year to date going into November. The final 2 months are lower only once out of 21 times. Again, the data, the historical data is pointing you towards a good Q4. We're in a bull market. There needs to be something to disrupt that. I don't know what it is. Nobody does. But we've pointed out yesterday how QQQ seasonally would be good and how I thought TQQ would be a good play on that. Well, here you go. TrendSpider picked it up on me yesterday. SPY, the next month, November, historically SPY's strongest month. Okay, 78% win rate. You don't see 78%. This is over 33 years. So it's not some insignificant stat. Remember, this is Black Friday. This is the start of the holiday season. This is the end of the third quarter earnings season. So again, 78% of the time it's up with an average of 2.51%. That's just in a month. So you average that out, that's like 24% annually. It's a good risk reward. But I'll even juice it up better because there are two ETFs that are triple leveraged on SPY. UPRO. UPRO is a pro triple leveraged daily. And again, it's like TQQQ, but just for SPY. And you can also use SPXL. So whichever one you want, SPXL or UPRO, it's the same thing. Go and do your research and understand. But you can see SPXL, here it is over the last 17 years. Okay? You can see that July, great months, 9.36%. Okay? November, 9.18. Again, juice it up with a triple leveraged ETF if the risk fits the reward. That's it. And is the economy good? Well, UPS, they're up 12% in pre-market. 12% in pre-market. Again, UPS, the Brown Shipping Company, is up 12%. I said yesterday that I thought Q4 would be good for several reasons, one being the holiday season. Well, UPS, here's the CEO update. We are executing the most significant strategic shift in our company's history, and the changes we are implementing are designed to deliver long-term value for all stakeholders. With the holiday shopping season upon us, we are positioned to run the most efficient peak in our history. He's telling you Q4 from a shipping perspective is going to be a record. That's what they're hearing from their retailers. So go and look at some of this. UPS. Is this a stock that you've wanted to get into? Well, 4-hour algorithm got you into 85. Where are you trading in pre-market? You are trading at 100. Covering this gap, which is up there. Again, I talk about gaps all the time. Is this perfect? No. But when you look at this weekly, you can see this potentially could have bottomed out. Is UPS in a turnaround? I don't like to buy down here. I'd rather start to see the 50-day move positive and the 200. But what I do is take from this story and say, you know what? Q4 might be very good because UPS and shipping is key to the economy. So again, the economy. and the biggest movers today. You can see the biggest movers, including CLS, Celestica, that anyone who listens to this podcast, you should have owned this one. Shares jumped, posting strong Q3 earnings and outlook, driven by sustained demand in data center infrastructure. We will go over this later, but FYI, in Alpha Picks, you heard me talk about this premium in Alpha Picks. Alpha Picks is a data-driven portfolio with 2 stocks every month, one on the 1st, one on the 15th. Celestica was one of those back in October of 2023. October of 2023. You are up over 1,100% if you were in CLS. Again, a 10-bagger in 2 years. So why do I love this portfolio? Because this is not the only one that's like that. SMCI went through that. APP went through that. There are several that they got in early. You can see the performance against the S&P. And FYI, PayPal, today's #1 stock. Why? Because they just announced a partnership with OpenAI. We'll go over this. But again, that's in Alpha Picks as well. It's a top 2025 stock. We'll go over that in a little bit, but it's clear. Earnings are turning out to be good. Stock index futures rise as investors assess fresh earnings. Again, it's pushing the stock market up. We will look at specific ones like Corning, SoFi, ones that just reported. We'll look at that at the end of this episode. But I bought a few stocks yesterday, and I alerted folks in the trading portfolio that I bought them. There were some alerts on the 4-hour algorithm yesterday. I got a lot of alerts at 1:30. I wound up buying 2 stocks. Now, it's in the Substack. If you go to Substack, you go to the chat section. It's in there for paid subscribers. You'll see it. There's a paid subscriber notification up there. But these notifications and even this stock portfolio, the trading portfolio, should not push you to make a buy, okay? It should push you to have those stocks on a watch list. But these are stocks that I brought up on this podcast. Just because I bought them shouldn't mean anything else in your thesis. But I did. Both are high risk, but they've been high reward. They're outlined in Savvy Trader, which paying customers to the newsletter get for free. And they're in the Substack chat. One is a crypto play and the other is an AI play. Just putting that out there. Because if you buy things based on just what I do, I have led you down the wrong path on several. So again, I want you to make sure that you do your own research. Now, yesterday I talked about, Alpha Picks. There was a sell in the Alpha Picks portfolio yesterday, okay? This was added back in July of 2023 and gained 20%. While the portfolio, the S&P during that time was up 50%. So I would consider that a loser. A stock over 2 years made 20%, but if I just had it in VOO, that money, I would have made 50%. So even though it's a positive, I consider it a negative, okay? Why was it removed? Well, it was removed because it was a hold for more than 180 days. So we'll look at this stock. It's Green Brick, GBRK, I think it is. Green Brick. Green Brick. Let's look up Green. No, come on. Home. Yeah, let me scroll down here. I just have to look at it. GRBK. If I could read my notes. GRBK. Okay, this is one. And if you just look at it, chart it, it has underperformed the S&P. Over 1 year, you're down 11%. 3 years, again, it was a 2-year thing. You're up 200% versus the S&P at 80%. They just got in at a bad time. Okay? The overall portfolio is up. This was just a bad pick. It's been a hold for 180 days. Now, is this one a bad company? No. But when I was deciding, should I hold on to? Should I hold on to this one or should I, get out of it? Well, I looked at it. Just across its 200-day, it's got its earnings coming up. It's been a hold for 180 days. I don't see anything on the horizon. I sold it. I sold it. So again, they emailed me. I made the determination within 5 minutes, move on. That's it. Now, I want to talk about jobs because yesterday it was reported that Amazon was going to cut 30,000 jobs. 14,000 is like a thank goodness it's not 30,000. We've all been in offices where you have 5 people doing the job of 2. If you're in an office like that, last week I posted a YouTube video from Motley Fool, and one of the advice was get a side hustle, go and learn AI prompting. I have a feeling not only is AI going to make corporations more lean because AI can replace workers, but they have to make earnings growth look good. So AI may just be an excuse to lay off people because even before AI, there were 5 people doing 2 people's job. Remember, the Fed is most likely cutting rates not because things are good. It's because the jobs market might become weak. We've seen inflation start to come down. So they've got inflation under control. We're not getting jobs numbers. That might all of a sudden go up, and all of a sudden the Fed is like, oh shit, we didn't have the data. So they're going to continue, as headlines like this continue to go out. Again, Amazon employs 1.5 million people globally. So again, are they cutting because of AI? 14,000 is a lot of jobs. Make sure you have, and I lived through 2008, the housing crisis. Jobs were few. I mean, it was a bad economy. I lived through 2000. I was 30 years old in the year 2000. I lived through that, lost my job. Again, you have to have something on the side. Make sure you are prepared for that type of situation. And another day, another OpenAI partnership, PayPal. PayPal beat earnings, but that's not what's moving the stock up 15% in pre-market. If you're holding, again, PayPal may seem like, hey, it was just forgotten. Well, it's in the, first off, it's in the AlphaPix portfolio and it is down. It is not up in the AlphaPix portfolio. It is down. But if you bought this in January of this year, are we going to start seeing this turn around? That was around $88. Where are you in pre-market? $76, okay? $76. They just announced earnings. I like PayPal. Do I love PayPal? No. Do I own PayPal? Yes. It's a hold in the quant. The valuation is still stretched, but more importantly, the momentum is bad. But could this good news? Again, it's a new management team. Could this good news start to make that momentum from a D? Because 3 months ago it was a B minus, but could it move it from a D to maybe another B? And then you've got the growth with OpenAI. Again, it's good products. We'll go over this as far as the earnings go, but again, I think OpenAI, it's clear. They announced a partnership. And Sam Altman has said it. We want partnerships with everybody. I like this one. It's 7 out of 40 in the global payment. SEZL is the number one. And you can see the 1 month performance of some of these. Again, PayPal is not the worst, but it's definitely not the best. So go and find good quality stocks. You can rank them based on this. This is just the quant rating in payment processing services. Now, Qualcomm, it's a core portfolio stock. This is huge. Again, if you are taking on NVIDIA, we saw what it did for AMD when they announced a partnership with OpenAI, and Lisa Su is starting. We saw what that did. Qualcomm was up 11% yesterday. I think there are winners outside of NVIDIA. I think now both Qualcomm and AMD have the ability to expand their stock prices, whereas NVIDIA will need to continue growth at a tremendous pace. If we just go and look at NVIDIA and we look at this growth, again, remember, this is a $4 trillion company. And we look at the growth. Their revenue growth year over year, if it will come up, come on. 71%. That's a lot to hold. Now, if you look up AMD, Their growth is 27%. Could they steal a portion of Nvidia because their market cap's only $421 billion? Then you look at Qualcomm, which again is getting into this business. They have a $201 billion. So they're even less. And if you look at their growth, again, can they just grow a little bit more? Maybe. Again, with an announcement like this, maybe this is pushing them into growth. So let's take a look at this. CLS, if you listen to my show or read my newsletter, you've most likely enjoyed this stock as a top 2025 stock. I took this screenshot yesterday and I posted this with this chart. We just went over this. But again, in Alpha Picks, this is a 1,000% gain since 2023. And it's been picked twice, not just once, twice. Once this year, and you are up on it this year as well. And they beat earnings. Q3 results, data center demand shows no sign of slowing. Yes, that's the message. And it's still a strong buy in the quant. Still a strong buy. It's been a strong buy. Let's go back 3 years. This one has very rarely been a hold. $11. Imagine buying this at $11 and in pre-market you're at $345. What does Wall Street think that is worth? Well, there's 18 analysts. They think it's worth $264. After this earnings, that will start to come up. So where are you buying this one? Well, I buy it with the 4-hour algorithm as we're in a bull market. So did I buy it this 253? You damn well know I bought it that 253. Was it a lot? No, we're talking probably even hundreds of dollars, not thousands of dollars. Because I own a bunch here at 77. I own a bunch here at 198. I own a bunch in January when it was named a top 2025 stock by Steve Kress in Seeking Alpha. Again, the bundle is where it's at. If you had the bundle, you most likely were invested in this one, at least since the beginning of the year. And I mentioned yesterday, I thought UNH was a really good risk reward, okay, on this earnings, because it's just undervalued. It's not the kind of stock that will move 10% unless it's under $300, because then the valuation makes no sense whatsoever. And you can see the 4-hour algorithm got you in here at 246. Now I bought at like 299. Why? A, I thought this gap had been filled and I didn't think we were going to pull back. B, Warren Buffett bought it. And I said, shut up and buy. And so I bought a good 5 figures of this one. I haven't added to it because I don't like the company. I just don't like the company. I think healthcare in this country is screwed up, and I think United Health is part of the problem instead of part of being the solution. Remember, the only way a healthcare company can make money is to limit their costs. That means limiting care to people that pay for it. So I just don't like that business. It's not one, but I am invested in it. And if it gets to 450, I will sell it for a gain. But I'm not adding to it. I just, again, to me, it's one that, hey, it's a trade. I've got my eyes on 450 and you see these yellow lines right here. You can see that was resistance right there. Hasn't really provided support. So at 366, the danger was at pulling back to 318, but my average purchase price is like 290. So I was okay with that risk reward. So again, United Health is saying, hey, things are going well. And then you've got Corning. Corning falls despite Q3 results. Outlook surpassing estimates. Again, things were good. Well, why is it down 5%? This is supposedly a good stock. The quant has it as a hold. When was it a strong buy? Let's go back and look. It was a strong buy back here at 63. You can see 6 months ago, the valuation was about the same at D. The growth was C+. It is today. The profitability at B, the momentum at A- versus B, revisions at B. So nothing's really changed. What changed with this earnings? Well, they announced that it was better, but look at that stock price. Year to date, it's up 88%. 6 months, you're up 102%. 1 month, you're up 11%. Look at the 52-week range. It's at its 52-week high. That would indicate you'd need to just blow it away in order for people to keep holding. The 4-hour algorithm, if you had that, you're in at $41. $41. I say that again, $41. You've doubled your money since April. This is a monopoly here in the US with fiber and glass, and it does have AI, and they are the ones that make the new iPhone glass. So as Apple starts to go up, this one starts to get more revenue. And I talked about that 200-day moving positive. We saw it with PayPal, how it was negative, and the 50-day was negative. This is all positive, but it's stretched, and these are profit takers. Do I think that it could move higher? Well, Wall Street's estimates, again, 13% downside. Where's the risk reward? Do I want to buy this one at the top or wait until it comes back a little bit? 3 days, wait until it comes back. I think it's a buy the dip. Am I going to buy it? No, I have better risk rewards in my watch list, but this is in my watch list. So now, SoFi beat. They're up 3%. Let's go and look at SoFi. This was one that I traded, and I showed it yesterday. I said, hey, risk reward. I like trading for a couple of years in this territory. Now that it's taken off, I don't like it. You can see how it came back, and then in April, bounced off that 200-day, and we shot up. I would argue, where is it more likely to go? 25 or 35? We're at 31 in pre-market. I would say 35. I have taken my bet on Hood. And that's my financial play. Is it a better play? Is it apples to apple? No. But I chose Hood instead of SoFi. Why? SoFi's still a little bit expensive. SoFi's valuation, you're trading. Oh, so why is Seeking Alpha so slow today for some reason? SoFi, 93 times forward earnings. Okay? Hood, on the other hand, 68. They're both extended. Then you look at the growth, 59% for Hood, okay? Revenue growth, 29% for SoFi. I just like Hood better. And that's a simple, just easy way to look at it. I just like Hood better. So I don't want to grow my portfolio into 5 million stocks. And going back to why PayPal might be a good bottom here, they're now paying a dividend. That's huge. It's cheaper than it was when it was announced as a top stock. You know, again, it was announced at 88. You can buy it for 76 right now. Their new management has initiated a turnaround, and they really have a great product that now seems to have pretty good profits, and they're paying a dividend. Is it going to turn into a strong buy in the quant? I don't know. I mean, its valuation still a bit stretched, not crazy. It's only 13 times forward earnings. But from a quant perspective, it's ranked number 7 in the payment processing space. Okay, SEZL is number 1. And you can see 6-month performance up 59%. So do I love it? It's not one I love, but I do own it. 2 of my top 5 positions, by the way, are in a current race for $4 trillion market cap. Who'll make it first? I don't care because I own both of them. Apple and Microsoft are about to join it. Here's the bigger picture. This article goes over it all. I like this one. Core businesses like Amazon and Google and Meta advertising, Apple's product ecosystem, and Microsoft Azure have made these giants not hesitate when shelling out billions of dollars on artificial intelligence. If artificial intelligence spend goes up, these should actually continue to go up. They are making more money. Big gets bigger. And I joke about, Jim Cramer all the time. He's on the Compound and Friends, and it was just released, I think, yesterday. I joke about him all the time. He's a really bad stock picker. Okay, his investment club does not beat the S&P, and there are times when I don't beat the S&P. I consider myself a pretty good stock picker, but again, I'm large cap tech focused. Jim is kind of the total market, and he likes to look at things a little differently than I do. But this particular episode, the clips that I saw from it is incredible. Jim Cramer is incredibly knowledgeable about stocks. The dude reads more than I could ever read in a day. I just started listening to it, but again, I think Josh and Michael are great interviewers, and I think they have great questions. And I think sitting up there with Jim Cramer, I think it's a good episode to listen to. So let's talk about some education now, because this is Ross Cameron of Warrior Trading, okay? And he in this video, again, this is what, a minute long? It's less than that. He goes over why volume is key to any stock trade. You can see he's changing the color of the volume bars. So I don't think it's a great thing to look at from an investment standpoint, because volume is temporary and it has nothing to do with the stock price other than pushing things up or down. But if you took a look at a weekly chart of SoFi here and you see, look at that volume start to pick up. See that blue line starting to go up? What does the stock price do? It goes up. So you can find entries with a stock. This one, the actual the volume goes up, but the stock price goes down. So it's not 1-to-1. But in shorter term charts that Ross trades, it is a 1-to-1. Because he trades on like a 1 minute time frame. If you see a pop go on that one, so if you're trading, it's great. If you're investing, it maybe could be something that you look at. I don't typically use it. Again, that's just my thing. I'm just trying to bring you something that you know, an alternative to look at. Now, tonight's earnings. This is Earnings Hub. I like looking at Earnings Hub. I like looking both Seeking Alpha and Earnings Hub. Earnings Hub, it costs you nothing. It's a free platform. Okay, what do we have tonight? Well, you've got Seagate Technologies. I like this one. I don't own it. So I don't particularly care. I'll be looking at it because their estimates for earnings per share, $2.28. They reported last time $2.59. Revenue, they reported $242. $2.42 billion. They're expected 2.54. So maybe it could, again, look at this one, see the revenue on this one. It's down a little bit, Q1 2022. So we could be going back to that all-time high. Maybe it's a good one. ENPH. This one's solar. This one is taken off, by the way. If you haven't noticed, solar is just we need more energy. And so ENPH, while it had that dip, we've seen it flatten out. Is this the bottom? I mean, you could have bought this one for $30 just back in August, and you're at $36. Again, are we seeing the turnaround because it's flattened out? Is it something that you want to invest in? For me, I think this one could move big on these earnings. Oh, come on. I don't want AI. We're going to look at the ENPH energy. There we go. It's a hold in the quant. The growth sucks. The momentum sucks. The profitability is fantastic. Again, the profitability is fantastic. Is this one that you want to go into? Let's see. Bloom Energy. And this is interesting. Okay. Let's go look at Bloom Energy. Oh, come on, Seeking Alpha. I think I've got to restart the browser. Bloom Energy. Let's go to the summary, because Bloom Energy, it has, this is going to be crazy. If they do, and again, it's on the earnings hub here. If they announce something nuts, this one could go absolutely insane because it's got 16% short interest. If they do some type of announcements, I personally would see this as risky holding through this, because if I look at the chart of Bloom Energy, it's been on a tear into this earnings. Look at this. The 4-hour algorithm has you in at $20. You're at 108. You've had over 500% gain. I'm sorry, 464% in just 146 days. That's crazy. So I view this one as risky. Okay. The valuation extended, the growth, fantastic. This is 216 times forward earnings. It's crazy expensive. And if I go down here and I rank this heavy equipment industry, heavy electrical equipment stocks. Again, this is an AI play. And you can see Bloom Energy right there. Okay. Number one is PSIX, which I personally own. I would much rather be in Bloom Energy. Why? Look at the 1 month performance. You're up 54% in 1 month in Bloom Energy. You're down 20% in PSIX. And yes, I have PSIX. 6 months, you're up 203%. In 6 months in Bloom Energy, you've doubled that to 473%. Look at Babcock and Wilcox, up 734% in 6 months. And again, this is part of AI. So Bloom Energy, for me, if I were in this one, I would say it's too hot to handle. The risk wouldn't provide me the reward because you're at all-time highs. I'd say for me, I'm taking the profits and I'm moving on. Now, scans, because we're in a bull market, today I'm going to include some scans, AGX, Argan. There are about 20 names that I'm going to put in here that have bullish entries in the 4-hour algorithm. This particular one, $295. It doesn't perform as well as buy and hold, wins 40% of the time, but your average win is 17%. Are you going to get 17%? Because your all-time high is up at 320? AGX, it's a good stock. Again, look at it fundamentally. Use the tools that you have. If you don't have Seeking Alpha, go and do the research into AGX. Would you buy it? Again, from a factor grade, it looks pretty good. The only thing is the valuation. It's expensive. But again, go do your own thing. VST, this is a power. This is Vistra Energy. This was last year's S&P winner. The top stock in the S&P last year was VST. $203. Boy, your top is about $220. And you're seeing $199 as a support level. That yellow line I put in there, that's a support level. What from where? From back in January, where Pelosi bought it. That was a high. And then you dip down and you seem to be using that as resistance. Their earnings are coming up next week. Maybe they report something great. Maybe they do some guidance. Go and look at it. Another energy one is TLN. Again, the list will be in the newsletter, dailystockpick.sub. And if you don't know the newsletter, it's all here on Linktree. So if you have any questions, hit me up. I will talk to you tomorrow. Say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss